Good evening, investors. My name is Kevin Vincent. I'm part of the MarketsMojo's product team. And today we are going to do an interesting and a very quick presentation on buy and hold strategy. What is it? What is the buy and hold strategy? Does it work? Do the institutional investors follow it? And does it work in the current market conditions? We'll answer all these questions. But before we get started, let's just do the disclaimer. We emphasize that all investors should use the information on the webinar merely as a resource to enhance their own research and understanding. Nothing discussed on this webinar should be considered as investment advice. We strongly advise all participants to check with certified experts before taking any investment decisions. Investments in securities is subject to market risks. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk, and the users should not place funds to invest unless they can afford to take the risk on their investments. Past performance is no indicator of future performance. Okay. So first off, we just wanted to highlight that we have just completed 9 years. And and our biggest discounts with 83% along with 2 years free were taken down, right? However, due to some popular demand, we have extended it only for a few hours. So take advantage while you still can. You can get Mojo 1 for $29,999, $24,999 for 1 year, and you get 2 years free. And the access is not limited to a specific portion of the website. You get everything on MarketsMojo. Okay, so buy and hold strategy. All right, so buy and hold strategy is maybe something that a lot of people have heard, right? So it's very about what is buy and hold strategy. So basically, it's a strategy that is advised to everybody when someone is often trading a lot. Right, and it is very straightforward. It's basically you go ahead and buy a very good quality company, and you hold it for a very long-term period, right? And this holding for a very long-term period means you're holding it for 10 years or 15 years at least, and you're not really, you're not really doing anything to it. So we asked in our group, we have a WhatsApp channel, and we had a poll in that channel, and we asked essentially. How many people believe in the buy and hold strategy? How does it work or not? So as you see the results, I have marked no, it's a spoiler, but as you see, most of the answers are on the yes column, and there is the people who don't believe in that are in the minority here, right? Just a small plug, by the way, you can join our MarketsMojo WhatsApp channel. You get all sorts of updates here, including Mojo 1 updates, all every major events that are happening, other webinars, additions to other additions to other to the Mojo 1, and essentially all the news channels. But let's get back to the topic here, right? So buy and hold, does it work? So the bid essentially said, the survey said, no, it does not. So it does not work. It does work, right? So let's, at MarketsMojo, our philosophy is always look at the data, and that's exactly what we're going to do today, right? So buy and hold strategy, you invest in good quality companies over a very long period of time. And this good quality is in hyphens. I will talk about it later. But does this philosophy create wealth? Let's find out, right? So we looked at the data, and 1 out of 200 companies are likely going to build you or create that wealth in that people often claim, the buy and hold strategy will generate for you. The balance of the 199 is essentially either going to underperform the market or is going to destroy your wealth, right? So it is essentially very critical to know which companies are going to generate your wealth. So normally, so we're going to look at actual numbers here. The last 10 years ago, companies like Deepak Nitrate and amines, these companies essentially, the companies that actually do hold potential are something that a lot of people might not even, bat an eye. They'll just say, okay, this is some small company, I don't know what it is. But not a lot of people will take chance on it, right? So exactly what it says. Will you buy Deepak Nitrate or alkyl amines thinking that it will create wealth for you? A lot of people are going to just say no, right? Similarly, today, okay, we'll get to this, but okay, next slide. So we looked at the data, distribution of returns, right? So this data essentially, to give you some context here, these are companies that are at least above 500 crores. There is a survivorship bias here. Basically, we're looking at the companies that have survived over the last 10 years. Obviously, a bunch of them have been delisted, right? So what we spotted was over the last 10 years, there is only 1.3% of the companies that have generated more than 60% CAGR with the buy and hold strategy, right? 1/4 of the companies, right, have given you less than 10% CAGR, while the Sensex itself has given 11.25%. So 1/4, I mean, it's mind-boggling numbers, but it has not even beaten the market, right? And this is another interesting data point. Only 1.3% of the companies have generated 60% CAGR, at least 60% CAGR, right? Now these are the companies that surged in the last decade. The market surged obviously, but these companies did not. So we're looking at the absolute returns here. So if you notice, we have pulled out some popular company names, like Vodafone, Idea. So when it comes to buy and hold strategy, it itself is a bias, right? However, it is a combination of a bunch of emotional biases, right? Now, there is a bias referred to as recency bias, where basically you're looking at the company that has performed well, or basically you're giving more importance to the companies that are popular now, recently, right? So in this case, we went and we looked at the top 10, so the top popular companies that were popular then, and these are some of those companies that people would have invested their money back then with the idea of a buy and hold strategy. Vodafone looks fine. I think I should put some lump sum amount here and hope for the best. Next 10 years, I'm not going to touch it, but as you see, then returns aside, there is value deterioration that has happened here. Yes Bank is another very classic example. Dish TV, Hathway Cables, Bank of India, Vakrangi, Z Entertainment. These are essentially all the companies that have just lost value, right? So people who have gone with the idea of, we're going to buy and hold, we're going to avoid all the volatility, and whenever the market falls, it won't bother us. But, clearly it has not worked for these companies. Now, these are some companies that have performed well, right? Or have they, right? So if you see, these are the 10-year absolute return, right? Oracle Financial Services, 158% return. And this is absolute, by the way. Bosch, NTPC, Wipro, 137%. Tata Motors, 107%, 17% return. ITC, 88% return. But sure, these companies have generated return. And so is it fine to say that the buy and hold has worked here? No, it has not, right? If you look at the bottom right here, I'll just move my mouse here. Sensex during the same period has gone up by 190% return. So if a company where you essentially are investing a decent amount of money in, and you're stepping out of, basically not even looking at it for 10 years, that company has performed well, sure. Some people will look at these numbers and say, okay, it's a great win, yaar. Mere company se to perform kar liya. That's why buy and hold strategy works. But no, it has not worked in this case. The company itself has gone up by 190. The market itself has gone up by 190%. You could have just made that, the market itself has made that much amount of money. You don't have to, research for that company and, invest. Sure, value is there, but it's not even beating the market. So understanding the power of compounding here, and to put this in context, if you look at if I have hidden this 7.6% CAGR, if you just look at this number, 2000 there is 1 lakh rupees over the next 22 years, that number has gone up to 5 lakhs. For people, it will be considered as a huge win, right? Like my money has not only doubled, it's tripled, it's quadrupled. My profits are insane. Like I have the buy and hold strategy works. It is great. But when you start looking at it from a CAGR perspective, that's just 7.6% return, right? And it is not even likely beating the inflation over that time period. So what appears to be good return might actually not be good returns, right? This is basically where the biases come into play, where basically the recency bias, where you might invest in companies that are doing that are popular or doing somewhat well, and you invest a decent amount of money, right? And then this is how they turn out. And then there are a bunch of companies that are performing. I'm not losing money in these companies, but these are not even beating the market, right? So these are some classic examples of where buy and hold strategy has kind of failed, right? Now, if you look at GMR Infra, back in 2007, obviously no one has. It's very difficult to time the market. So timing the market, investing at the top is also unlikely. But assuming you invested somewhere around here in the 42 or 60 to 80 range back in 2008, and if you blindly followed the buy and hold strategy, essentially we are looking at a situation where you have almost either lost value or if you've invested here, but essentially the price has essentially not moved over till today, right? With 2004, June 2005, the data is as on, by the way, June 5th, 2024. So the value, instead of value generation, we are looking at value deterioration here purely from an inflation perspective. The price has not even moved, right? JP Associates. The chart is just mind-boggling. Again, 2007. Sure, assuming you didn't even catch this top. If you invested right here at like 100 level, 100 rupees price levels, even if you caught it here, buy and hold strategy would have failed here because, again, keep in mind these are some of the popular companies then. 100 rupees back here, if you invested and if you had exited here, great, you would have made decent amount of money. But then buying and holding it, and you're losing all the potential returns that you could have gotten, and now it's at the below 50 rupees mark, right? And again, value deterioration. PC Jewelers, right? It's a bit more recent case here, 2013. Sure, if you had invested 100 rupees, or you could have gotten out of the company back in 2018 at 600 rupees. However, if you followed the buy and hold strategy, you would have started off at 100 and it eventually would have tapered down to less than 100, which is what is the price today, right? Again, classic case of why buy and hold strategy won't work. Vakrangi. Now, price is almost, it's again below 50. It's almost hitting the zero scale. Obviously, it's not that low. But back in 2010, you invested here and exited here. This would have been these are crypto level gains, right? However, if you followed the buy and hold strategy, you would have been validated at these levels. However, the prices crashed here, and you might have thought, okay, chalo, here volatility won't matter. I'm already up, and buy and hold is buy and hold. Just follow what it says, and you would have got another chance to kind of exit here. But then, guess what? It's back to where it was back 14 years ago, right? Now we have now if you look at institution, what are the US institutional investors doing, right? If you look at, we studied the data and we learned that their holding time period is just 1 year, right? And now that's just that's what the people outside the country are doing. What about people inside the country, like the mutual fund managers? The holding period is approximately 6 to 8 months. And you can actually go and test this data out. What you could do is you can check out a mutual fund scheme and you can see what its holdings were 1 year ago compared to what it is today. It's very unlikely you're going to see the same list of companies. These guys are exiting. US institutional investors are exiting, right? Exiting on time, right? They're not following the buy and hold strategy as well, right? Now, Warren Buffett. Now, this is a classic example. A lot of people so what I did was I conducted a survey around the office, and I asked, and someone quoted that Warren Buffett follows the buy and hold strategy. So we did some digging, right? And there was a study conducted, coincidentally, between 1980 to 2006. Now, John Hughes, Jing Liu and Mingshang Jiang essentially did this research. Their findings were very extraordinarily interesting. Median holding period for Warren Buffett is less than a year, right? So the investor is not following the buy and hold strategy. Similarly, 30% of the companies sold are within 6 months, right? Now, some of his investments, popular investments, and see, the thing is, when once you quote these numbers, you defeat the argument that check out Coca-Cola. That is like your that is like your buy and hold investment, like he's made insane amount of money there. But that is again, coming back to the statistic, it's 1 out of 200 companies, right? The rest of them will either underperform or will remove your value. The Berkshire basically bought 3 drug companies, AbbVie, Bristol, and Merck, right? All of them acquired in 2020, and he exited, partially reduced his positions back in 2021 itself. Right? It didn't go beyond a year, right? Now, I've highlighted the problem, right? Like buy and hold strategy, sure, a lot of people follow it, and I feel it is basically itself is a big bias, right? Often the biggest bias in the space is basically a lot of investors tend to hold on to investments that are, tend to get rid of their investments which are performing really well too quickly, right? And they tend to hold on to the losers with the anticipation, with the hope that the company, sure, it's just gone down now, it'll eventually turn around. People don't like to book losses, right? And these are the same people who eventually turn their thoughts into, now this company quality is good. Yeah, I've put a decent amount of research into this company. This company is going to do well, right? And then they can classify themselves as the investment as a buy and hold investment. And I was part of this group, and I'm pretty sure a lot of people turned into a lot of investments turned into a buy and hold investments during the volatility that we witnessed in the early June, right? Like during the election volatility. It's exactly my point, right? Now, what is the new normal, right? Every company has its own cycle. In some cases, it'll last for a few quarters. In some cases, it'll last for a few years, right? Every company will have a period of underperformance, be it in HUL, Maruti, Infosys. Markets likes and dislikes changes, and so is the price premium. Hence, buy and hold strategy will not always ensure positive results. Not that I'm saying that buy and hold strategy will never work. The statistic I've mentioned, 1 out of 200, right? But does this slide, promote the idea that, okay, take not buy and hold, take nahi karenge. Does that mean that, I get started trading, intraday kar do? Is that what you're trying to say? No, that's not what you're trying to say. So look at Reliance Industries. Now this is a company that during 2010 to 2016 essentially was trading at a very narrow range. Right? Here, patience is basically the name of the game here. It was trading at a very narrow range, and then after 2017, the price just shot up, right? So point being that, it is, market requires some level of patience. And for that buy and hold strategy to pay off, you need to be patient. As I mentioned here, every company has its own period of underperformance. It is unlike Infosys, basically the companies you should not really expect companies to, your buy and hold companies to keep rocketing up and up and up and up, right? Fundamentals of the companies will change over a period of time. Companies will always change. Now, there is another bias that comes to my mind. It's called confirmation bias. So, what usually happens in research is that, let's say, a lot of people put a decent amount of time in researching a company, right? Like in this case, let's say Reliance Industries, I put a decent amount of time researching the company. I think it's a good company. I've done its fundamental analysis. I've gone to MarketsMojo. I've just checked out all the stats that I need to. And then I take a call, okay, chalo. I have a 9-to-5 job. I don't have time to, constantly monitor, constantly update. I'll just put a decent amount of money and I'll move away. And now at this point, I'm like an advocate for this company. What will eventually happen is that the company, the fundamentals will start to change. And some of them might be in negative light. Some of them might be in positive light. So in order to, it's an emotional thing. A lot of people don't like to be told that you're wrong. Right? Like if I've done a decent amount of, I've put a decent amount of effort into something, to be told at the end of the day that, tu galat hai, is kind of heartbreaking, and people subconsciously try to stay away from that. So confirmation bias essentially comes when you're just looking for the piece of information that confirms your views and research, and it makes you feel good. Dil mein thoda acha lagta hai. But on the other hand, you try to stay away from the bad news. All that might be true, right? So, it's the idea is to stay patient with this, right? And people often don't update their research, and hence a company that you might have thought might be a very good company. Just ignore the slide. I'm not talking about Reliance Industries, but I'm talking generally. If a company is basically, was good at day one, might not be a good company, 1 year down the line, because as the slide says, the market is not static. It's very dynamic in nature. Anything can change, right? Uh, yeah. So now look at HDFC Bank underperformance. 5 years basically, sure, returns aaya hai 20. This is absolute returns, I think 21.8% ka returns, right? However, it is not even beating the market, right? So buy and hold strategy might work. Sorry, generating positive returns is not a plus. Is not a sure shot of saying that buy and hold strategy works. It has to also beat the market, right? Now the art of selling. Now, okay. Now I told you don't trade. Also told you not to hold on for a company forever, right? Unless so MarketsMojo helps you solve this problem, right? If a company is the fundamentals have changed, MarketsMojo catches that, right? It's completely data driven, so it would tell you, it's time to exit, it's time to buy, it's time to sell. Now that will essentially solve this problem. Now, as the art of selling, instead of buy and hold strategy, you must also learn the art of selling. Every company will have a mid-term cycle for 4 to 5 years where a stock will underperform irrespective to its pedigree. Right? This period normally frustrates investors. They will lose patience, and as their portfolio does not perform compared to the overall market, they'll switch to ride the momentum. So, as I was saying, they'll lose patience. A lot of people would have lost patience with Reliance Industries in the 2000 to 2016 era, right? And people who actually follow the buy and hold strategy here, right, have done really well, right? So again, you need to learn how to sell. I mean, another, it hurts a lot of people when, when they're asked to book losses, right? I often get on calls at MarketsMojo just to address some angry investors who are basically saying, "Yeah, आपने बोला था buy करो, and now we are saying sell." What is that supposed to mean? Like, it's, and what, we try our best to communicate that, a company is good today doesn't mean it's going to be good forever, right? It is, the fundamentals will eventually change. The companies, it's, a company today might not be a good company tomorrow. And the classic example, I think the first slide, where a lot of companies have just lost value, kind of proves that as an evidence. Anyway, so points to remember, and no one can buy stocks at the bottom and sell them at the top. This is impossible. We can't do it. You can't do it. No one can do it. I mean, there may be one guy who can do it, but that might be 1 in a billion. It's statistically very impossible to do so. Opportunity loss is a big factor to watch out for. Hence, not selling a company at the right time could cost you a lot, right? I'll go back to that slide. Look at Vakrangi itself. Oh, I'm sorry, not too far back. This chart essentially highlights that exact point. At this point, a lot of people might, have this FOMO, will have a bias where, yaar, aur upar aa sakta hai. Let's just sit with this. It might go even further higher, right? And, people who, this is another example, PC Jewelers, ठीक है, यहाँ पे खरीद लिया, यहाँ पे नहीं, I mean, like, see, as I mentioned, like, we can't time the market, you can't buy at the bottom, sell at the top. But, once you've generated enough returns, and let's say the fundamentals change at these levels. I'm just taking I'm just saying there's no actual data behind it. अगर यहाँ पे कुछ buy या sell आ जाता, you should ideally get out. You would have been much better positioned today over the long term. See, price would be at 200 levels where the price today is less than 100, right? But अगर आपने एक दो साल के बाद देखा कि now I had sold in 200 at when the price levels were at 200, now it's 600. Sure, we'll get a lot of angry calls, but fundamentals will eventually, the prices will eventually catch up with the fundamentals, right? Right. Investors need a disciplined approach that will help them emerge as successful investors. So the name of the game is patience, and you need to learn how to sell the company. As simple as that. So buy and hold strategy works provided that you have the right temperament. Unfortunately, a lot of investors don't have that kind of temperament. Not all companies, again, this kind of a summary, will work under the buy and hold strategy. Remember that 1 out of 200 companies will only give you that level of return. 1.3% of the companies have generated 60% CAGR over the last 10 years, right? 1/4 of the market has underperformed the benchmark, and a portion of that has even given you negative returns, right? Recency bias, look forward. Just don't put your money in companies that you think are, you've just heard of the company and it's doing well now, but that isn't an endorsement that you go and you go put a decent amount of money in there and let it ride. Things will change. You have to adapt to that, and you have to accordingly take a call, right? Hence, asset allocation plays a significant role. So, not all companies will work. We are not gods here, neither are you, to identify that one company that is going to work well. So, hence, that's where asset allocation comes into play. So, it is more of a patience game. We all love T20 and one day, but we all love T20 and one day matches. So, you have to accordingly adapt yourself. Right now, this sheet maybe is very interesting. Is basically all the wealth creating companies. I've highlighted all the companies that lost value, didn't outperform the market. Now, these are companies that have generated wealth. Now, if I had an option of putting a poll, I'll have. If you are part of the WhatsApp group, a poll will be added there, just to see if you have seen or even identified these companies 10 years ago. Right now, they are, some of them are kind of popular, but Prashad will add there will be a poll in the WhatsApp chat. You can just join the chat. The link is in the description. So let me know how many of you guys have actually seen these companies, right? Or have heard of them back 10 years back, right? Now, if you notice, most of them, right, there are a few, except for this company, all of them are still small to mid cap companies, right? Hence, reiterating the point that, large cap companies are not going to give you that wealth, are not going to be that wealth or generating companies. It is always often going to be the mid caps. But yeah, the poll will be up. Just let me know if you have even heard of these companies. These are our top 1.3% of the companies that have generated more than 60% returns. Right. So, the conclusion, we're almost there. The market is a great teacher. If you don't learn from the market, you will have to pay the heavy price. One must unlearn quickly in this market, and you can't become rigid in these approaches. Biases are biggest enemy, and one of the biases investors carry with them is the buy and hold strategy. You lose, you tend to hold on to your losers a lot more than and you tend to get rid of your winners a lot quickly, right? So, the new mantra to make money: change with the changing times. Fundamentals are never going to be same forever, right? Often, maybe that 1 out of 200 company might, but it's very unlikely that you're going to hit that needle in the haystack. You're going to hit that hit the bullseye there. So change with the it's very important to be a bit flexible, remain a bit nimble-footed, and the world has become more and more integrated. So things are getting a bit more. Things might just change just like that, right? The camera industry essentially was just destroyed when the iPhone came up with the with a camera on the phone. That just destroyed the camera industry. So my point being that things are very dynamic now, and it's completely integrated. So things could change just like that. You need to change with the changing times. Previously, people would change a home fan or paint their homes once in a decade, but now one does it very often. Similarly, you need to also change your view on buy and hold. And we'll end with the quote of the great Ian Castle: "Don't rely on yesterday's analysis. Companies are always evolving in good and bad ways. Know what you own at all times." Right. With that, we'll take a few questions, and I hope I can address some of your questions, and we'll keep it light and go ahead. Sir, buy and hold strategy. Sorry, sir, buy and hold of stocks. but how long to wait to sell? Please share your thoughts. Right. So what you could do, sir, is as I mentioned, there isn't a timeline, right? Like now I've used 10 years worth of data. The best thing here is that, and this is what I do, sir, is that I can't constantly monitor a company. If I am, it's just one company. We could just upload your portfolio at MarketsMojo and let us take care of it, right? Where basically we are evaluating and monitoring all these companies continuously, and if there is a sell call on it, you will be updated on it, and that's the time to exit, right? Next question. How to join WhatsApp group? I think the link is in the description. It's in the WhatsApp description, and it's on the website as well, where this video might be playing. The link is in the description. You can join the WhatsApp group now. Yeah. Yeah, Kevin, how can you sell exactly this company stock to be sold at this price? How many I've seen miss the data? So we're not. So as I claim, we are not gods either. But see, my overall point being is that you can't really stay blind to what is happening in the market, right? You're also welcome to, sir, keep tracking the companies that you are, perhaps considering to buy and hold, right? What we are doing is we are looking at the real-time data. As soon as the data comes in, as soon as the quarterly results are coming in, the quality has changed. The company is not able to service its debt. The growth rate is, falling. Essentially, summarizing the point I'm trying to say here is that we are monitoring all the important data points. And if the company, tends to fail tends to deteriorate fundamentally, we'll come out and we'll say that it's a sell, right? We might, and you should, and accordingly, that's the biggest indicator when it comes to, the fundamentals deteriorating. We might miss, I'm actually curious as to how many times we have missed it, but it's very unlikely. But, I would like to, Mr. Srihari, I would like to take this discussion further. My email ID is kevin@marketsmojo.com. We're not saying that we are gods, but, the strategy of buying and holding, simple as that, I bought this and I remain blind for the rest of the 10 years is essentially what I'm asking you not to do, right? We can help you. We can monitor constantly, and we are not afraid to sell, right? And I think that's the general message that I'm trying to push across. But sir, again, like to understand some of the points, some of the times we have missed. It will be a great learning, and we are learning. We are monitoring it, monitoring ourselves as well. But my email ID is kevin@marketsmojo, KEVIN@marketsmojo.com. You can shoot me an email. We can take this conversation offline. Next question, please. Thanks for educating us. What should be the right time to exiting like PE more than 100 or anything? So I'll keep it very easy, sir. You just upload your portfolio at MarketsMojo, and you'll get the advice as to when, or you can basically come on. If let's say there's a company that you are monitoring. For example, I'll just share my screen and I'll show exactly what you can look at. Just hold on a second. Wait, don't share the screen yet. Just hold on. Okay, you can share the screen, please. Okay, can you share the screen? Oh, it's not happening, is it? Okay, so sir, I'm sorry, there is some technical issues here, but the best thing to do, sir, is, I'll, for the paid clients, search for a company that you have, right? Scroll to the dashboard, okay? And you'll see the score of the company. Right below the score, I wish I could show this to you. But right below the score, you can also see, the score, the change of the score, right? The company's score has changed from buy to hold or hold to buy at a certain date at a certain price, right? So if you are, if you upload a portfolio on a platform, you start a model portfolio, you will get the updates on your email on the platform itself. But if there is one company that you want to monitor, you don't want to create a model portfolio, you can go and check this out here, right? Here you can keep, actually the thing is you can keep it in your watch list as well. and you'll get updates on if the score has changed, right? And that, I think that's a simple enough indicator for you to get started on that, because honestly, sir, even there are a few companies that I monitor, but I can't monitor all the time. I'm working, right? I have a 9 to 5 job. I'm pretty sure you do too, but and I might tend to miss out. And then what happens is, again, the confirmation bias. I love this company, right? I love company X. I put a decent amount of time in, researching about this company, and then, and I've put my money. I put a decent amount of money in this, right? And now learning, like let's say the company is not performing well, learning that, okay, the fundamentally the company is changing, it's a difficult thing to stomach, right? So the best thing to do is, learn how to start selling, right? Don't be blind. Don't blindly invest and forget about it. That's another way of saying buy and hold, buy and forget. Bhool jao. Doesn't work all the time. You might underperform the market. You might lose value itself. And just the best thing to do is learn to just start selling. Sometimes you'll have to book losses as well, but you're better than taking a bigger loss. Next question, please. By the way, I hope I was able to answer the question. You can shoot me an email at kevin@marketsmojo.com in case I have not able to do that. If the stock price is up by 200%, should we book profits or keep holding if it's a fundamentally strong company? So there is a company in Mojo stocks. It's a very good question, interesting question actually. There is a company in Mojo stocks. I'll name the company. Okay, there is a company in Mojo stocks that has been in the list. It's Jupiter Wagons. It has been in the list since 28th June 2023, right? It's almost 1 year now. It is up by 300%, beating the market of BSE 500 35%, right? Now this company has gone up beyond your 200%, Mr. Jitendra. It's gone beyond your 200% mark, and we have still said not to sell the company, right? Because the fundamentals are still strong, right? Often what will happen, it's still buy rated, by the way, at our platform. So what I'm saying is that price performance alone might not be an indicator. What you have to look at is, fundamentally speaking, if it is, if it's still sound, if it's still that strong company that you thought it was back when you invested, right? Companies, as I mentioned, companies will keep on fundamentally changing. Now, Jupiter Wagon, I've not studied this company, but eventually might, deteriorate, might still remain strong, even though it has generated returns. So, sir, it's not price based. I would say it is. You just need to look at the fundamentals. Once the deterioration happens, I think that's the time to get rid of it. Next question, please. Sorry. So, where to learn all about MMApp? Sir, you can. So I coincidentally do the demos as well. Master the Market series. So you will find some of my videos on YouTube. I take everyone through our services, our premium services, including the model portfolio, which you can use to combat the buy and hold strategy, where you will get updates on when to sell, and when to buy new companies and so on. So you can just check those videos out, sir. I think next week, Monday, Tuesday, I'll be doing it again. So you can look forward to that. Next question. Hi Kevin, I tend to, is from Mr. Madhusudan. Kevin, I tend to sell a company if the results are down, if it's a good strategy to sell when the results are bad. I wouldn't really want to give you a strategy to follow, sir. I would just say that, look at what we are saying, right? So it's just me. I'm a human. I am also susceptible to emotional biases, right? I might have confirmation bias. I might have recency bias. I might have the biggest bias of buy and hold. So best thing to do is just leave it to MarketsMojo. I mean, the data it's purely looking at the data. It cuts through all the biases. So if the results are bad, maybe, our systems essentially analyze the quarterly results within 30 seconds, and you can just quickly go and check if the company is still rated buy, or sell or hold. So you can accordingly take a call on that. Next question. We have a lot of questions today. I'm very happy about that. Hello. When one should decide to sell, when changes the rating to hold, sell, and suggests other two alternatives right from hold rating. I'm not clear what this question is trying to ask. When one should decide I'm not clear on this question, Mr. Rajiv. Could you just shoot me? I'm sorry. Maybe I'm missing some context here. Could you please send this? Maybe we can have this discussion offline. My email ID is kevin@marketsmojo.com. You can just send me an email. I'll be able to better answer this question. I don't want to leave you hanging on this. Next question, please. Many a times, Mr. Ravi, your buy recommendation comes after the stock has run up considerably. As investors, it's a bit scary to buy at that stage. Your views, please. So our views are not going to be, it's not going to be a monthly call. If our ratings, so I wish I could share my screen. I'm sorry. It would be very easy for you for us to kind of highlight this. I understand there is this is an issue that is this exact issue that you have raised is something that we hear from a lot of our stock of the month users as well, right? Like sometimes, not all the time. The companies that we highlight as a stock of the month, it opens strong, and a lot of people miss out on that, some percentage of the returns. But our view is not, to get that 2%, 3% rate, and our views are not going to be extremely short term, right? Sure, our views might change, but it is not going to happen within a week or so, right? So I would say, I understand it's a bit difficult to see that, the company has gone up by 10% already. But if the company is rated by, I would say stick around. And then once the rating changes, I think that's the time to evaluate and get out. Next question, please. Oh, that's the questions that we have. Okay. First off, really happy that we had a very, very interactive session this time. I and Mr. Vijay is another analyst here. We both went through the data, and we wanted to show that buy and hold strategy, it's not as effective as people think it is, right? And a lot of people often fall for this bias, and we want to bring light to this strategy. It's not 100% strategy like a lot of them, and it is a big bias. And if you think about it, just evaluate it for yourself. You might be a guy, you might have those few companies that you still pinch yourself ki yaar maine kyun becha, right? And you will definitely have those companies that you'll be afraid to get rid of today, right? Even though the companies especially when the companies are not doing well, right? You might be having ki yaar maine company kharida tha to it was good, and the price is down, right? And maybe it's time to update your views on it. And it's, again, as I mentioned, we don't like to be wrong. We, meaning humans, don't like to be wrong. We like to stay away from that negative view, and as simple as that. So it's best to learn how to start selling, right? Again, if you should share my screen, please. Again, just reiterating one final point before we close the session for today. The special extension is only available for a few hours now. You get if you buy for 1 year, you get 2 years free. You get a massive 83% discount. Get the entire Mojo 1 package for $24,999 for 1 year and get 2 years free. You can also join our WhatsApp channel. The link is in the description. You'll also find the discount that I'm highlighting on the screen in the description below, right? I hope you basically took value from this. And I wish that I hope that I come on the platform and give you such similar educative analysis on some other strategies as well. So just long story short, just try to learn how to sell, book losses, I'm Kevin Vincent, part of the Markets Mojo product team. And until next time, good luck in the markets.